Hey guys, welcome back to another video. In this one we'll be doing Euro-Yen April 2021. So if you haven't checked out January, February, March, then definitely check out the other backtesting videos. I've got a playlist on them, I'll put them up on the screen, and we'll get straight into it. I also want to play a clip from my previous backtesting video where I go over some of the entry types, entry criterias that we'll be going over. Basically there's two entry types, and how I'm trading is either continuations or reversals. And there's two types of continuations that I'm going to take, either a retest continuation or a flag setup continuation. And when I'm taking a reversal, I'll take the either retest reversal. Let's just see what that looks like on the screen. Our retest continuation is, let's say price is moving up, we have a pause in the market, I'll take the retest on that level. And then we have the continuation flag, which is we have momentum up, make a high, counter trend, we break this low here, this is our counter trend move, we have a retest and we get in on this, and we're going with momentum, with price. So these are our continuation trades. And if I'm taking a retest, let's say we've had a descending channel, we pop up, have momentum, then we just get on the retrace on this most recent low level. We can also take, the continuation flag, but this would be the retest because we've basically come down descendingly and then impulse up, a change in and shift on momentum, and we're breaking this high. So now we are in a uptrend market, and we take the retest for that reversal to the upside. I hope that kind of makes sense. I want to just point out some things that I actually look for. So for example, that is, the clear one is ascending or descending nature. You can call this whatever, pattern, channel, or even just price action in general, right? The second one is at least clear momentum. In other words, I like to look for two impulsive candles. Now, impulsive candles and clear momentum is so subjective, and it depends on the pair, depends on, what the market's like. And that's where it's going to really vary from, trader to trader, and your risk appetite, what you think high probability is, what valid is, your experience. But clear, this is the kind of things that I would look at and I would reevaluate for the specific pair. And also I take into account wicks, how wicks sort of, when you get a wick, you sort of range around a little bit. Now, obviously the market either moves impulsively or correctively, but correctively cannot be sustained for a long period of time before it either shoots up or it shoots down. So just keep that in mind as well. And the other thing is that euro pairs tend to, when we see the ascending, that's a reversal pattern to the downside. If we're descending, that's a reversal pattern to the upside. What euro pairs tend to do is, we're up, we ascend, and then we push up, we explode to the upside. So that's just something to keep in mind, something that's been found with euro pairs. So let's get straight into it. I'm using TradingView as the software that I'll be backtesting using the bar replay tool, and I'm going to put it up on the screen right now. So let's just get straight into it. Vertical line just to show we are on 1st of April 2021. And right now we can just see we have been making sort of bullish market structure going to the upside. Right now kind of showing a pause in the market, a little bit of consolidation / corrective behavior. You see the high is currently up on this level, broken the low now, so we're pretty much on a downtrend on the 1 hour candle time frame. And we'll just see how price reacts. Strong bullish impulsive candle here. If I just zoom in a little bit more, so I want to see how price is on the next candle, and I want to see how price actually reacts on this level here, because this would be the most recent high. I'd actually be interested to take sort of a retest entry. To be fair, we'd already be in this trade, but 2 pips above this high would be at 33. 12 pips stop loss in this sense because of this retest trade. So the reason basically why I'm taking this trade is market structure is behaving in this fashion, and we're just assuming price is coming to the upside, and we're taking a retest trade after having some move to the upside. So price basically just moved into our stop loss area. So I'll definitely say this is more of an aggressive trade. The big reason why I like it actually is because of how we broke the high, and it was a stronger body close, backed by we have been making higher highs and higher lows, but on a structural level. So you can start to see when I'm seeing this sort of price action compared to the past couple months that have been a bit dead, I'll be happy to take a strong body break of structure in this region. So if we are just taking, we're going to be using these sort of little red lines sort of for our stop loss. Remember how I manage my trades is we just, if we're pushing up and breaking highs, then I'll just trail to the low. So we have this inside bar here. And by the way, these orange candles are just an inside bar indicator. So if you just type in inside bar here, this one will come up, and that's basically what I'm using. So prices again has pushed up, so I'm just gonna trail my stop to here. So we're running about, I mean, we've got about 1.12% profit locked in at this point. Price is now starting to become a lot more corrective, and price is now taking us out for, yeah, well, let's say 1.12%. So let's just keep playing price forward. Very corrective behavior. And there is an opportunity to get in on this inside bar level here, but the reason why I'll be a little bit more conservative is because we are pushing upwards. I want to be taking trades to the upside. The downside is limited. So I actually, if you've noticed, in my previous couple backtesting videos, I've never really looked at things too structurally, but that's helped me. Understanding sort of more market structure has helped me to kind of know when to get in, when it's worth getting in, and to avoid, you know, unnecessary losses. Obviously there's going to be times when it plays out and it works, but I found that over a large sample of data, this is higher probability, especially for how I see the market and how I've been, you know, how I've been sort of learning the markets in the past couple of years. Price has just been corrective now. It's making sort of ascendings, descendings, ascendings. Usually that just means we're just going to range around. And let's just see what happens. Yeah, nothing is actually interesting me. We've got to push up. What would be nice to see is if we get a continuation, or to see how we approach sort of this region here. Let's just see the next candle. And yeah, we've just smashed right back in, right back through. So that's just something I'm a bit cautious of, really coming back down. Now, since we can kind of see we're consolidating and sort of have this range where we're kind of around this area here, the most high probability kind of trades are definitely the descending that kind of either touches that region or even comes down, causes the descending, and we get the reversal, or vice versa, an ascending slash corrective. Either it's going to push up or more likely push down, especially with the EURJPY, as I've said before, they do tend to like to, let's say, ascend, then push up, or descend and push down. But in this instance, if we're getting an ascending and pushing down, that's something that I'd like to get involved in. Vice versa, the descending to push up. In this region, we're literally just catching people on the wrong side of the market. So that's just something to keep in mind, especially trading ranges. Right now we are ping-ponging through, pushing up, kind of getting, it's funny how we spoke about that, because we're literally getting ascending behavior in this region. I'm loving sort of the candlestick formation in this level, in this area as well. Basically price is trying to push up within the hour, and there's momentum, there's sellers pushing it downwards, and then we've got this sort of like retracement candle here. I'd actually be interested to see how price gets back onto this level or if it comes back up, and see if we can get a reversal trade, retest to the downside. So this low is at 491.71. I'll definitely be a lot more aggressive now, trading on the upper or lower end of a range. Like I wouldn't really take the buy unless we're getting an impulse to the upside or we're getting clear, sort of, if I show you guys, when price moves in this behavior where it's pushing up, making high highs and high lows. Those of you who are trading more structure will kind of understand with what I'm saying. But yeah, I'm liking the formation here. Candlesticks, ascending behavior, push down, and we'll see how this goes off. So we would be tagged in now actually with that wick. When we see sort of like a little wick break or a wick entry, lovely stuff. So let's just see what happens. Let's actually trail our stops. Let me just grab it from here. We're already at break even pretty much, and we'll just see what happens. And yeah, now we're getting sort of a wick break. Let's see what we're running at the moment, around 0.5%. We've come back up. Yeah, so price is still messy because we're still trading in this consolidation range, and I'm going to point this out again. Trading on the 1 hour, obviously you're not going to get as many setups compared to if you're trading on the 1 minute, 5 minute, 15 minute, where you're constantly going to be involved in trades such as, maybe in this region, or maybe in this region, or setting a take profit in this region, this wick on the lower time frame. That's going to have some more information, more data. So yeah, this is just the 1 hour, remember that, guys. Price is pushing down. See what happens after these impulses. We're getting a big wick. Currently our low is here, our high is here, we're on an uptrend, and an area of interest that would catch my eye is this level here, this specific level. It'll be interesting to see how we if we kind of descend back here and maybe pop up. But the reason why I'm not too keen on this is just the fact that we are ping-ponging off this level. I don't like taking trades in the middle, anywhere, sort of in this area. It's very, especially on the 1 hour again, it's very, you're like in and out of trades quickly, especially knowing we're in a corrective period. So I'm gonna leave this here, but I'm gonna see how price, okay, that candle does not give me confidence. So, I'm not gonna be setting an entry, but I think it's still interesting to see how it all behaves. Yeah, price is very corrective. I'm not interested at all. Especially, again, gonna stress this, trading on the 1 hour. But I do want to actually, just looking back, looking left at sort of how price is forming, I do find this area very interesting, because I remember I spoke about trading within the range, getting that descending behavior. We're basically getting it here. It's still kind of within the range, but if we just look at it, I wouldn't have gotten involved. I just don't personally like these wick breaks. I prefer body breaks. They kind of help me feel a bit more confident and showcase a little bit more momentum to a direction. So when I see a descending channel and then a wick break and then small candles to sort of fill that wick or that mini range, it doesn't really, it's more low probability in my opinion from what I've been testing in the past. Alright, so we're actually getting the first impulsive candle out of all this mess, right? So if you just look at my crosshair, this is sort of the upper levels, the lower levels. I would actually be very interested to see, you know what, I'm gonna see one more candle. This is looking solid. I'm gonna set a retest entry on this inside bar level. I like to trade inside bars with momentum. And let's see, this high is at 9.4, so I'm gonna be setting it at 1.4 with a 12 pip stop loss. Now, this could either go two ways in this kind of region, right? When you get a pattern or a structure that's been respecting for a while, then you get a push out. Okay, you're either gonna get continuation and then price will then continue, or price will just continuously reverse and either continue to go to the downside with continuation, or it will just start to mess around again until you sort of get some sort of continuation that usually confirms the move to the upside or to the downside. In this case, we're getting heavy momentum back, sort of feeling like, we're gonna talk a little bit of smart money concepts here, but sort of feeling this inefficient price action here. We've got a bit here as well, but let's see what happens. We've got this push up, we're triggered in, and we're taking it out for the 1% loss. And it is what it is, we accept that, and we just keep going, we keep moving forward. So yeah, price has just come straight back in, tapped into this region here, and nothing looks promising for now. We're just coming back to the lower end of things. This looks interesting. Whoops. So what I'm seeing here is descending channel on the lower level. Sorry, my drawings are awful. Descending channel, lower level, and what else have we got? Massive rejection candles, sorry, rejection wicks, and a fat impulse. So if this was our low and this was our high, we broke it with the body. Let's just see what happens next. That's okay, it's not like it's a strong retrace. So what I would be inclined to do is actually set an entry on this inside bar level here. And that is, what's this high here? 798999. So we set it at 99 with a 12 pip stop loss again, unless we're taking a flag, then that's 15. And let's see if we get triggered in or if this trade gets invalidated. So we're still pushing around. So I guess some people will be like, okay, why don't you take a flag on this sort of break and retrace and be up here? The reason is, usually I would likely get in at the better price, which is here, the retest. There'll be situations where I will take the flag, and that'll be if we had a little bit more confirmation to the upside, but it being so close, I'd much rather get in with the retest. Also, as of filming, it's currently near the end of January, and I've been testing out like wick breaks for the flag compared to body breaks, and I'd much rather get in with a body break and like with a proper retrace. So triggered in, we move the stops. If we break this high, let's just see what happens. And we have broken the high. Let me just steal a stop from over here. We've broken the high. I'd say we're about like we've taken about 0.4% off the risk, and wow, that is a fat retrace. Not surprised by that reaction, to be honest. So yeah, after seeing that fat retrace, we're out for about 0.6%. So let's keep going. Let's see. This could be another one sort of cooking up. So we've kind of come back mitigated and got this descending structure. Let's see if we get push up and see if we can retest. So it's basically, imagine this blueprint, catching people on the wrong side of the market. This pushes even lower, and then this comes back. So let's have a look. Rejection wicks here. Let's just see a bit more confirmation, and we get our confirmation, we get our impulse. All right, entry on this high. What's this high level? 803, so 2-3. 1, 2, with a 12 pip stop loss. And let's just see how price comes in, price comes out. All right, we are in, back in business, trading our stops, see if we go up even more. We're pushing up nicely now. It's always not comforting, but like, I guess the word is comforting. It's quite nice to know that, you know, this pushes up, we push up, we kind of get this, again, it's hard for me to not mix sub strategy to this main strategy, but I guess I'll ease it in, but sort of buying order flow. So this is a good example of one on the 1 hour. This is a good example of buying order flow. But yeah, not to get too confusing, price action terms, descending channel, momentum, breaks structure high as well, not just candle high, and then just simply saying an entry 2 pips above the most recent high. Let's just see how this goes. We break that high, move the stop. Honestly, it's really nice knowing when you're a new trader and it's just very mechanical, you just kind of stick to the rules, and then backtesting it knowing that it works. We're currently at 4.5% locked in, and that is pretty much, I'd say, yeah, we've pretty much banked 4.5% on that. I want to say this actually broke the high, but then the low wouldn't make much difference. But yeah, it's really nice knowing this strategy is very mechanical, and minimizes confusion in a sense, because if you backtest it, you will gain confidence. Just having a look at price action, taking a step back, we're on the higher end of this mess. This was a really good sort of breakout, fake out, whatever you want to call it. But let's see, when prices like this, from the get-go, from the origin of a push up, what I mean by origin is like where it kind of started, this kind of gives me confidence to take more buys than a sell. I just know this from experience personally, but if you can understand the origin of a impulsive leg up or an impulsive leg down, then that's kind of where you want to be involved in that leg, and you want to be involved in it early rather than much later down the line where it starts to lose its probability of it playing out. So if we're just looking at this price here, I would actually get involved in a flag to then confirm a push up. I think I spoke about that earlier, that if price is going to continue, then you'd like to get some sort of continuation trade to take it. So if we're looking at this push up and we're seeing these rejection wicks, price not wanting to come down, it wants to go up. We've got this high here, this low here. We are in an uptrend. We've got a push up, push down, push up, push down. And this would be an invalid trade anyways, even if you're getting in on this candle here. It breaks the high, and like I said, I don't like getting involved in a wick break for the break of the low. Let's just see how price is reacting. All right, we've got a strong push up even on this level here. Let's set an order on this level, see if price comes down. And price is not coming back for us, and that is okay. That's okay. Those things will happen, and we don't get frustrated. It's just part of the game. It's what happens. Price will move, a leg will start without you, but you can get involved at the next sort of entry. There's so much more opportunity in the market. It's something I would always tell myself, because sometimes you'll get FOMO, you know, especially starting out. Like, remember that there's so much more opportunity in the market to get involved with these trades. So my thought process right now is setting an entry on this high, and then we kind of be tagged in, but I'll be cheating because it's already on the hour. But let's have a look. Well, I want something a little bit strong. It's a little bit of a mess right now, but that doesn't really faze me just because of where we came from. I'd like to see another push up, or in terms of the leg, or just a push up and a retest back up, and then we continue. All right, this is strong. This is sort of where EJ shines in terms of like continuation trades after an impulsive leg. Oh, we're in with a wick. This is good news. Let's just see what happens. Oh, that was very close. Even closer. Oh my goodness. All right, okay. Okay, we can trail our stop. Okay, now we trail it. We are now risk-free. I'd say like 0.5% profit locked in, pushing up nicely. So let's see what happens, how this goes. Oh, very nice. Okay, we've also closed on a wick. We know what that means. There is now more selling pressure. Price is not wanting to go up. There's probably SMC concepts here, an order block somewhere on the higher time frame. We've locked in so far 2.4% profit, and I wouldn't be surprised if, yep, price reverses. 2.4% profit, pretty solid. Again, if you're trading 100 grand, that's around $2,400. And price I now think is going to consolidate after we've had this impulsive leg. So what I'm trying to say is earlier was that this is the origin move. Getting in early is always more ideal. So we're pushing down now. And in fact, this is now showing me selling sort of order flow. In this case, I actually want to be involved. I feel like I keep pressing these keys too early, man, but this is actually really nice. Low 6.5, and I'm going to show you why. I'm taking a sell here. The reason is we have strong rejection wicks. Price is coming down and coming back up, coming down, coming back up, coming down, coming back up. This is me trying to merge smart money concepts to this main strategy. I know a lot of people want me to talk about more smart money concepts, but it's a lot more complicated than just taking a few trades, how I've been teaching or been speaking about, and like how I've been trading before. So that is why I'm trying to ease into it when I'm doing my back testing. So I think first quarter of 2021 when I was back testing EJ, I don't really speak about it too much. Maybe I spoke about inefficiency here and there, but now we're a little bit talking a bit more about like order flow, nature of price, buying and selling. Why does price react like this? Understanding that wicks have so much more information involved. So kind of easing hannahforex into sort of the sub strategy, because I know it will get confusing if I just suddenly start speaking a complete different language of trading. And yeah, we're pretty much out here for 0.8, 0.77%. Also, I just realized we're already in May, so I'm gonna end it here. Let me just zoom out and sort of, let's have a look at what we have back tested so far. So let's just do that. So we roughly took 1, 2, 3, 4, 5, 6, 7 trades, and there were 2 losses, and you can see here, massive range that we traded, a cheeky little breakout trade here. That was one of our 1% losses, and that's okay. And you can see losses are a part of the game. 9.06 minus 2%, so around 7% month. That's pretty solid, especially if you're trading multiple pairs and then you're trading on a funded account. Pretty solid. So if you put the numbers in, then it's pretty mind-blowing, but like not to get too caught up with yourself. Just focusing on the processes, on the systems, and then just trading. So that's pretty much it, and I just want to thank you guys for watching. If you've made it to the end of the video, I don't know, let's put drop me a potato emoji to know, so then I'll know the real ones who make it right to the end of this video. And I'm sorry this video is late because I'm having problems with my computer, so that's just been a bit of a bummer, but that's all good. It's just the computer at the end of the day. What sucks more is just that I wasn't able to like keep up with that Monday upload schedule. It's kind of broken, but anyways, we move, and I'll see you guys in the next video. If you like the video, give it a thumbs up and take care. God bless.